Alright everyone, Cowboy Trades here, welcome back to the channel for another Bitcoin update. So, it's been a few days since my last update. I am still recovering from some nasty illness, but nonetheless my friends, we do have a lot to talk about. So no BS, let's jump right into it. I'm going to update you on the news for crypto, the greater markets, updates to our Bitcoin and stock market TA, my price targets, when I think we're breaking down and wrapping up the video with an update on the on-chain metrics. With all that said, let's jump right into the news, starting off with the MOC imbalance. Now, veterans of the channel know I love to look at this once a month at the end of every month. So let's talk about it. The early MOC imbalances came in at 1.3 billion to the sell side. By the time we closed, we were 6.5 billion to the sell side. So basically what this means is we come into the market close, the order books are imbalanced due to an influx of sell orders with not enough buy orders to the counterpart. This of course leads to a market on close imbalance, also known as a MOC imbalance. Sellers must complete their trades before markets close, and subsequently the market normally tumbles to the direction of the imbalance. Note the direction that came in this week as the S&P 500 erupted into new lows, and as you can see, the majority of the volume came in and the majority of the price action happened at the exact date, the last trading day at the end of the week. This is why these MOC imbalances are so effective. We're going to continue looking at these once again at the end of every month. On to our next story. The Bank of England does a full U-turn and turns back on quantitative easing with plans to print up to 65 billion. However, the markets didn't particularly seem to care, as you can see over here on the daily time frame for the S&P 500, we broke down into new lows a few days later. So it seems like everyone, including myself, is waiting for the US to pivot and doesn't really care about the UK pivoting. With that said, multiple Eurozone countries have recently been tempted by the printer, so it's no surprise to see that Eurozone annual inflation jumped up to 10% in September, the highest levels on record, with energy alone coming up to 41%. Wrapping up our stock market news segment. So Putin basically came out and said, hey, let's talk about negotiations, and then basically 1 second later, boom, he doubled down and refused to negotiate about any annexed territories. This may have pushed Ukraine into applying for that NATO membership as it rules out talks with Putin. And just quickly for our crypto news segment, the Solana network was down again for the 8th time this year after a misconfigured node caused an irrecoverable partition in the network. The outage lasted for just over 6 hours. I've said this many times on this channel, but I'm a big fan of Solana. For that statement to remain true, Solana Labs absolutely needs to get their shit together. There is only so long I can watch these outages take place. If Solana doesn't sort it out before the start of the next bull run, I'll likely be looking at other competitors. For now, I still plan on buying Solana at $10, but really, come on, sort it out. Wrapping up our news for today, 45% of Ethereum validators are now complying with US sanctions. This has happened due to validators running the MEV Boost Relay Flashbot. Now, the MEV Boost relays are centralized entities, and just like we said ages ago, proof of stake would ruin Ethereum and make it even more centralized. Everyone keeps on talking about how Ethereum will overtake Bitcoin, how it's the next Amazon, the next Apple, the next Google. All I see is a pile of worthless tulips. But there we go, that's all the news I missed while I was ill, so now let's talk about the charts. So for weeks we've been talking about how these new lows in the tip ETFs were going to choreograph into the rest of the stock market. Since we predicted this a couple of weeks ago, the Dow broke down into new lows, which of course eventually bled into the S&P 500 just like we predicted. As you can see, this week is beautifully following our 2008 fractal as we come down into new lows. And on the daily time frame, you can see the last day that was traded on this week when we had that MOC imbalance, we really rocketed to lower levels. So I'm definitely expecting a lot of continuation to take place in the next week. And in slightly more recent news, at the end of the trading week, literally on the last day for the Nasdaq, you can see we finally broke down into new lows. Which leads us to Bitcoin. Why have we not broken down yet? Well, crypto is undoubtedly holding on well, but for how long? I think in the past week, we've basically just been having this tug of war between bullish and bearish news. The bulls are celebrating over the Bank of England turning back on quantitative easing, and the bears are just laughing watching the stock market indices break down to new lows. There is definitely this kind of tug of war feeling. There's a disagreement in the market right now, but there is only so long that Bitcoin can diverge from these typical stock market indices that we've been watching. Remember, 2 or 3 weeks ago, when we were watching the tip breakdown into new lows, we were saying this is going to bleed into the Nasdaq, this is going to bleed into the Dow, this is going to bleed into the SPX. It took a few weeks, but eventually that divergence, it gets snapped away from you. So with that being said, my targets for Bitcoin in the short term are still down here at 17,300. And 15,800 is my price target for the higher time frames. You can actually see the way that I've originally drawn this triangle pattern. We've actually been kind of breaking to the upside of it and just lollygagging round about the apex. So in my opinion, I think it kind of makes sense that we draw this from a slightly different perspective. And before I made this video, I was drawing this a few different ways, seeing how the best way we've kind of reacted to this line is. And in my opinion, this is probably the best way to draw it from now. So I'm definitely not saying that we need to be trading sideways, chopping around into the apex of this triangle. I say this all the time, but with these triangle patterns, Bitcoin loves to break out about 70% of the time. So at least in my opinion, this is currently how I'm drawing this out and expecting this to play out. I really don't think that we're going to have a bounce at the top of this before we break down. It is a possibility, of course, but nonetheless, really what I'm waiting for right now is for Bitcoin to finally snap into action, follow what the tip's been doing, what the Dow has been doing, what the SPX has been doing, and what the Nasdaq's been doing. It is not going to diverge from these for long, and if you think we're just going to completely diverge and go on a bull run from here, you're going to be disappointed. So let's wrap up the TA for Bitcoin on some final thoughts before we do a quick on-chain update. On the weekly time frame, Bitcoin closing beneath 19,400 means we'll be confirming a head and shoulders breakdown with a price target all the way down here at 13,500. Again on the weekly, let's look at some indicators. EMA ribbons, you are currently trading beneath these on the weekly time frame. Bull market support bands, we're currently trading beneath these on the weekly time frame. 200-week moving average, we are currently trading beneath this on the weekly time frame for the longest amount of time ever. If we look back, you can see we have previously not spent too long trading beneath the 200-week moving average, which is another reason why it just doesn't make any sense to me why these bullish YouTubers are saying, oh, we're in 2018, we're in 2015. We're clearly not. We're in a completely different market cycle. I've said this before and I've said this again. I was here in December 2018. If we were in this bear market right now, it would already be done. What happened in 2018 was nothing compared to what we're currently living through now. So if anyone ever says we're just repeating 2018, slap them in the face. These two charts, they do not look similar whatsoever. And on the monthly time frame, you can see Bitcoin is breaking down into new lows. On the monthly Fibonacci candles, we've been eaten alive since 60,000 without a single month break. And on the weekly time frame, it's not too different, but you can see that we're clearly breaking down. It really doesn't look like we formed anything resembling a bottom at this moment in time. But it doesn't need to be that complicated. Yes, I'm a crypto YouTuber and I thrive off giving you my unique theories, my chart TA, my insights in the stock market that you won't find on any other channel that makes my channel unique. But once again, it doesn't always need to be this complicated. It really is as simple sometimes as clearing up your chart, looking at the market structure, taking your emotions out of the picture and looking. You've got highs, you've got lower lows, you've got lower highs, you've got lower lows, you've got lower highs, you've got lower lows, you've got lower highs, and what do we have next, ladies and gentlemen? We're going to be coming down for lower lows. If you're looking at this market unemotionally, removing your bias from this, it should be very, very clear. And it's pretty much one of the first lessons that you learn in trading that previous support flip resistance is bearish. So when we're looking at Bitcoin's previous all-time high right around here at 20,000, and you can see that in the past couple of weeks we've broken to the downside of this, come back up and retested it and got pushed back down, it should be very, very clear. You don't need to have been trading these markets for years and years and years. You just need to remove your emotions from the equation and look at these markets as robotically as possible. That's always what I recommend, and that is how I like to approach these markets. You can also see we returned to the point of control, which was also Bitcoin's previous all-time high. We came back up to this and we're getting pulled down. Once again, ladies and gentlemen, it does not need to be rocket science. Sometimes it is as simple as removing your emotions from the equation and just looking at the chart. It's very black and white. Following these basic TA rules, and of course for the on-chain updates, following the smart money is one of the easiest ways you can successfully navigate these markets. So when I see whale wallets and institutional wallets dissipating, vanishing, they're nowhere to be seen. They're leaving this market. And the only people who think the bottom are in are these retail traders who are drastically accumulating whenever smart money has to dump. But they're running out of capital and institutional money still has a lot to outflow. For these reasons, my friends, I'm still sticking with my prediction that we make new lows in the next 8 days. Could I be wrong? For sure, this was a super degenerative short-term prediction which doesn't have any bearing on the future and really doesn't benefit me in any way if I'm right or wrong, because I'm not trading right now. But nonetheless, if I'm wrong about this specific date, I'll still be calling for new lows in the next week or so, but for now, my friends, all we can do is sit back and see what happens. So, that's all I've got for this episode, my friends. I'm hoping we'll be back to the regularly scheduled programming in the next upcoming week. I'm still not feeling 100% by any stretch of the imagination, so depending on what happens on Monday, I may or may not provide a further update. Of course, if anything major happens, I'll throw myself out of bed for you lot. I'm definitely missing the daily uploads, and I'm especially missing all of you, but of course, as you can imagine, health is wealth and health comes first. Don't worry about me. I'm going to come back swinging in no time. I'm not going anywhere. But for today, my friends, that's all I've got for you. Cowboy out. Peace.